The broadcast is now starting. All attendees are in listen-only mode.
Hey, everybody. It's Jeff Gibby over at Metastock. We have a little bit of a delay. Jeff Tompkins was having some issues connecting, and so we were rebooting and we're waiting him to join us. So in the meantime, I'm going to read a legal disclaimer so I can get that stuff out of the way. And then we're going to entertain you for, I don't think it's going to be very long. He's just doing a reboot. So he should be right here. And I am ready to entertain. So with that being said, to get this part of it out of the way, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell. It's guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy a security. So, Greg, are you here with me? Cool.
Oh, I'm sorry. Now people can hear me. I keep on forgetting to turn off my mic on the YouTube side. So what is the current status with Mr. Tompkins?
It looks like he's rejoining us in progress. So
okay. What are you doing to keep us entertained for the next few minutes? I understood there would be dad jokes.
I've got a whole box of them, but I have some cow-related ones. So actually, this was a gift from my daughter. So, but what I want to say, the first one, there's a cow theme to the first couple of jokes. What do you call a cow with no legs?
Stumpy.
I guess you could call it that. Ground beef.
Oh. Okay.
Where do you find a cow with no legs?
I know the answer to that. Where you left it, because he doesn't move. He has no legs.
Yeah. Unfortunately, that's all of the beef ones that I've got. Jeff is joining, though. Here's another one that's one of my favorites. I'm not even getting into the book.
Wow.
Why did Han Solo not like his steak?
It was chewy.
I told you that one already.
Yeah. The problem is I have heard a lot of your dad jokes, Jeff.
Yeah. Here's another one.
All right.
Just recently, I've got a student driver. There's a story to this one, which I'm going to tell anyway. So
I'm listening.
I have a student driver, and I'm teaching her how to drive, and we got in an accident. And as part of the rental, I rented a Tesla from Hertz.
Oh.
And I noticed in the Tesla that it's a newer Tesla, but it didn't have a new car smell at all.
Oh.
It more had an Elon Musk to it.
Oh. Okay, that was stupid.
We got there though, right?
Yeah, we got there. So I'm afraid I don't really have any. I'm sorry, I'm trying to plug in my fan here because I think my computer's getting a little hot. I don't have any dad jokes. It's been too long since I've had kids at home, so I don't really keep track of those sorts of things.
I saw Jeff's on. I'm just wondering if he is having an issue connecting to his audio, because I don't see his audio is connected. I have his phone number though.
I see him as well. So I don't see that he's connected. Would you like me to run a video or something, Jeff, while we're waiting?
Well, yeah, I can give one more dad joke first.
Okay.
And then I have a box of them. So, but the last one I've got for you is, what did one wall say to another wall?
I do not know.
I'll meet you at the corner.
Yeah. Those are great. I can just. We don't have the audio turned on for the audience, but I can feel the moans reverberating through the biosphere, the broadcast beard.
Everybody that's watching us, for the love of God, will you hurry up?
I know.
Get on.
Well, okay, I see Jeff's microphone is on but muted.
Hey, Jeff, are you are you okay? Well, let's see.
I see he's on. Do you hear Jeff? I don't hear him.
I am here.
Oh,
yeah.
Still having technical difficulties.
Hmm.
Not getting the platform opened here for some reason.
Yeah, he's having an issue starting with Metastock. So I think we have to go on. I know a lot of times we have a bit of a different deck. So with the technical issues that we're having, I think you should use whatever charts you feel most appropriately. And I will be ready to kind of show some examples and how to scan at the very end.
Okay, yeah, that'd be great. Let me give me just a second to get another chart pulled up here, then we'll kick it off.
Fellas, I'm going to go ahead and back out and let you go on your way. Good luck to you and break a leg.
All right, thank you.
Yeah, in fact, Jeff, I think I'll keep this running just to see if it happens to open.
Okay.
And we'll see where it is here in a few minutes. Let me get.
I only run into technical issues about right before I start to promote too, or present. That's what's gonna happen.
Tends to be how it goes.
You missed a lot of really good dad jokes, so you might want to go back and watch the first 5 minutes of the recording on YouTube when you get.
I was gonna say I'll make sure to check the recording.
All right.
Always looking to add to my repertoire, so.
Yeah. Well, I have 4 girls in school, so I get them all.
Yeah, you gotta have them ready, lined up.
All right, I'm gonna go ahead and introduce you. Are you ready to go?
Almost. Yeah, you go ahead, and I'll be ready.
All right. I want to say welcome everybody. Yes. Or they're hoping for 4 good jokes. It's one of those two, right? So let me thank you for hanging in there with us. It's good to see everybody. If you're joining us on YouTube, make sure to like and subscribe, and we will deliver at least one almost funny dad joke every time you come. So if you're joining us on GoToWebinar, it's good to have you. Thank you for coming. We appreciate it. I hope you learned something. I hope you enjoy the class today. Today's presenter is Jeff Tompkins. He is somebody that I've known for probably a number of years, 5 or 6 years, or longer. I can't, the older you get, the faster time seems to go, at least in my experience. When I knew Jeff, he had taught a lot of people how to trade on a website called udemy.com. And there's a few things that I'm going to say about Jeff. He's very, very smart. Actually, he's actually a full-blown hedge fund manager, and he can tell you more about that if he wants to. But he does a really good job in explaining things. The techniques that he uses in the market are very, very understandable. They're very straightforward, and I really, really love having him on. So with that being said, Jeff, I'm going to kind of get you going. We'll go ahead and turn the time over to you, and let me go ahead and make you the presenter.
Great. Excellent.
Okay, here we go. All right, should be coming through. I will stay on here until I can see you. And I don't know if you have the YouTube chat open or not, but I do have it open. So if we have any questions that come in through YouTube, I'll let you know on that as well.
Oh, great. Yeah, if you could relay this to me, that would be fantastic. I don't have that open. I do have the GoToWebinar chat and Q&A open, so I'll do my best to keep an eye on those. We'll save plenty of time for questions at the end as well. But if you guys do have questions in the meantime, don't be shy. Please interrupt me. I don't mind, and want to make sure that nobody leaves with unanswered questions. So,
all right, the floor is yours. I'm going to get out of the way.
Okay, fantastic. Excellent. Well, sorry about the technical hiccup, guys. We're just having a little issue resetting some data for me on the Metastock platform. So we may not get that resolved by this evening, but I've fortunately had backup charts ready to roll. So we'll get through everything. And then Jeff will be here. Jeff Gibby will be here with us to share some of the stuff that we're going to be teaching tonight on the Metastock platform. So you'll get to see that and see how it works. All right, well, let's kick it off. So tonight we're talking about price action pivots. So this is a price action based strategy that I'm going to walk you through tonight and show you how to use it so you'll be able to walk away with some actionable new approaches to trading the markets by the time we wrap up our roughly an hour together tonight. So when we talk about price action pivots, okay, we're going to be looking at, this is a price action based application. So you can use it on any charting platform, broker platform. You can use it across any time frame, any asset. So we'll look at plenty of examples together tonight, so you fully understand it by the time we wrap up. And then we're going to be looking at applying an indicator to the price action pivot setup that I'm going to be revealing to you tonight. So by the end of our session, you'll discover how to use price action pivots to spot turning points in the markets. And this information is critical. It's valuable because it can be used to forecast market trends in advance. So it doesn't rely on lagging information, right? So we're actually going to be using it to identify price action behavior and then extrapolating that out to forecasted trend directions, whether that's a trend reversal or a trend continuation. So that's really the key here is we're going to be looking at two different tools tonight that can actually forecast accurately what markets are likely to do without using all that lagging garbage out there that unfortunately we're so often exposed to and run into difficulties when we try to apply to the live market. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets as they become more erratic, less predictable, and more uncertain. So before we get into that, I'll read you a quick legal disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. You must meet suitability requirements with your broker in order to trade securities or options. And any results that we cover today, whether hypothetical or real money results, just know these are going to be past results with the benefit of hindsight, and we don't guarantee that anyone will mirror any of the performance figures that we share on the session today. So with that out of the way, I'll give you a little background on myself real quick here. Again, I'm Jeff Tompkins. Welcome to all of you. It's great to have you guys here. In fact, if, as I'm kind of walking through a little bit of my bio, if you want to pull up your chat or Q&A and let us know where you're calling in from, where in the world is Carmen, San Diego. I don't know if you guys are old enough to have been around when that show was out. I think it was back in like the early 80s. But let us know where you're from. It's great to see where everybody's dialing in from. So I'm in Boise, based out of Boise, Idaho, and have over 2 decades of experience trading the equities, options, and futures markets. Received my professional training at Morgan Stanley as an intern at the trade desk back in the early 2000s. And about 8 years ago, founded Altos Trading, where I'm the Chief Investment Strategist, have over 60,000 members in over 100 countries across the globe. So really excited to work with new, eager traders and investors. And as Jeff mentioned, I'm also a hedge fund manager at Altos Capital. So what I'll share with you today are actual tools, indicators, price action strategies that I implement in my hedge fund. So there's a really unique opportunity to get an inside look into the operations of the hedge fund world and specifically how a hedge fund manager trades for his clients. And I've been doing this for, coming up, I think, on 5 years, and have actually launched the fund at a really difficult time back in late 2019, early 2020, right before the big market crash, which actually wiped out a ton of hedge funds due to margin calls and whatnot. And, was able to survive and thrive and have had positive years every year that I've run my hedge fund. So I'm really proud of that. In fact, in first year of launching the fund, won an international award for most innovative hedge fund So a lot of the strategies and things I teach are innovative. They're not commonly used among other institutional traders or trading educators. So again, I think this is a great opportunity for you guys to get inside look into that. I'm also the developer of the trade trend indicator, which we're also going to be using tonight in combination with the price action pivots setup. All right, so let's get into price action pivots. Hey, Dave in Vancouver. Hey, unless you mean Vancouver, Washington, my sister and her husband lived up in Vancouver, BC for a few years, just moved back to the States I believe it was last year. Time flies. It was either last year or year before. They've been back for probably about a year, 1 to 2 years, but was able to get up there and visit them a couple times. Love it. Also been to Vancouver, Washington. That's where you're from. So both great places. Okay, Canada, cool. Yeah, I love Vancouver, Canada. Awesome. Well, looks like we've got a nice group on with us tonight. People all over the place. Great to see that. And thanks for taking time out of your evening. I'll make it worth your while. You have my word there. So we're going to talk about price action pivots now, how to forecast trend direction. And this is really one of the core methodologies I use to identify trend reversals, trend continuations, without using all of the old antiquated, lagging indicators that are so abundant out there. So when we talk about price action pivots and we talk about trends, momentum, we're going to get it into a little bit deeper here. There's a few things we need to know to make informed trading decisions, right? One is we need to know when to buy, we need to know when to sell, and we need to know when to stay out of the market. And that third one's critical because unless you're a buy and hold investor, this is really the core of why we trade. Is we want to be involved in the markets when we have an edge, when market environment is appropriate, and stay out when it's not, right? That's really the flexibility that trading gives us relative to buy and hold investing. Now, there's nothing wrong with buy and hold investing, of course. The big difference here really is if you are a buy and hold investor, you need to be aware of and prepared for major market downturns. And, unfortunately, in people's IRAs, 401ks, or other retirement accounts, they get trapped in a bad timing situation and markets crash right when they're getting ready to retire. That is a big problem. It can do a lot of damage, and it can even, unfortunately, delay or prevent retirements. Or some of us trade for income or trade for a living, right? And if we're doing that as a buy and hold strategy, we're very vulnerable to those types of scenarios, which come up more and more frequently, right? We've had some pretty significant market downturns just in the last few years. And you just don't want to get trapped in those, or at the very least, you want to be able to play the market to the downside. And price action pivots will help us do that. So these are the core things we need to know. What we're going to cover tonight and what you'll discover is, number one, how and why periodicity highs and lows provide crucial trend and reversal forecasts. And what I mean by that is really regardless of the time frame that you're trading from, whether it be a tick chart, a 1 minute chart, a 5 minute chart, a daily chart, or weekly or monthly chart, right? This is a fractal approach or strategy. And because it's price action based, can be applied across all of these different timeframes. Now, we're also going to look at how to identify when markets are likely to reverse trend. And this alone, I think, really can turn people's trading around, because even when we get into a successful trade, there's always that risk of a trend reversal where we might see, profit, albeit on paper, we're open, what we call an open P&L. We get into one of these successful trades, we're making money on it, and then everything reverses on us. And before we know it, all of that, hypothetical profit that we had in the open position has evaporated and maybe even turned into a loss. Okay, so once again, we're going to look at two tools that help prevent that from occurring. We'll look at how to identify key supply and demand points, and then how to set accurate entry, stop loss, and take profit levels. And that's the really cool thing with price action pivots and the trade trend indicator, in particular when we use them in combination. There is no guesswork. not only is there no guesswork, so you know exactly where to get in, you know exactly where to get out, you know exactly how to manage the position while it's open. There's no guesswork as far as any of that goes. There's also advanced notice here with these. So we know with a high degree of certainty ahead of time the likely trend direction. And if it doesn't play out, we can actually just stay out of the trade. And this is where that key third bullet that I just shared with you comes into play. Like, when do we stay out of the market? So we need tools that can help us do that, right, without having to guess. Hey, Alan. Hey, Joe Costa, Columbus, Ohio. Ohio, that's the state that everybody confuses my state with. When I say I'm from Idaho, they're like, oh, you're from Ohio. No, I'm from Idaho. There you go, Alan. That's awesome. All right, so getting back to price action pivots. So as market trends prepare to reverse course, right, which they inevitably do on any time frame, on any asset, shifts in supply and demand within candlesticks can actually give us clues to future directional movement. So what we do is we use a 5 candlestick pattern, and it says minimum. I'll explain that here momentarily. We use a 5 candlestick pattern to identify when trend changes are likely to occur. So once this pattern is completed, okay, then we have a confirmed pattern. We have the blueprint for forecasting directional trend, all right? And sometimes that trend direction will follow through, sometimes it won't. And that's why we're going to throw in another tool to boost that reliability even more. All right, but I'm getting ahead of myself. We'll get to that here shortly. For now, let's just look at price action pivots. So price action pivots only require basic candlestick or OHLC, which is open, high, low, close charts. Okay, so you can use any style of chart that you like, as long as it shows the high and the low, really. We don't even necessarily need to use the open and close. All right, we're going to be tracking changes in candlestick highs for short setups or candlestick lows for long setups over 5 candlestick periods minimum. Again, I'll elaborate on that. All right, price action pivots can predict market shifts, all right, quite reliably. We'll look at examples on live charts, current charts that are taking place right now in the markets. It can be applied on any retail trading or charting platform. It can pinpoint turning points in a security with astounding accuracy. And when we combine it with another tool that we're going to look at, and which is available on the Metastock platform, we're gonna take it as, you know, as Emerald Lagasse says, kick it up a notch, right? We're gonna take it to the next step, to the next level, and I think you're really gonna like this and be excited about it. All right, so again, we can apply this to any market. So equities, ETFs, futures, forex, any time frame, intraday trading. So if you day trade, this is a great topic for you. It's also a great topic in methodology if you are like me and don't do much day trading, if any, and trade off the daily, weekly, or longer time frames. Okay. Now, we are going to get over to some charts, okay, and talk about price action pivots. All right, and what are they? What do they look like? How do we identify them? What are they telling us? All right, so here's what I apologize. We had to make a data update to my Metastock platform today. So ran into a hiccup, and I'm just going to have to use my broker charts, which I know is not, let me just take this off here, what we had in mind. But again, I want to show you some other tools too on Metastock. So Jeff Gibby will be assisting us with that when we get to that point. Right now, we just want a clean, basic chart. Okay, no indicators, no fancy schmancy stuff. We just want, and I'm using candlesticks. Again, you can use OHLCs or whatever chart pleases your eye. We just need the high and the low. So if there's any charting styles that might, like range or Renko charts or something that might not give the accurate high and low, those we'd want to avoid. We just want the actual true high and low of whatever asset we're looking at. Right now, we're just going to start with the basics and look at a S&P 500 SPX daily chart. Then we'll go in and look at some intraday time frames and different assets. In fact, if you want, we can open it up. I call this on our Tuesday weekly session that we do live with our members every Tuesday at 7 Eastern, our ticker roundtable. So our members get to share tickers and we look at them together and stuff. So if we have some time, we can do that. All right, so now let's get into the price action pivot strategy. So this is something I've used for many years, very reliably. I consider it a huge component of my success in the markets, and had a great year last year in the markets. Last year was, it was kind of easy money, especially if we were buying whole because the markets went up after 2022 bear market. But we're still getting all these like pretty wild swings in the market. I mean, if you just going back a year, right, on a daily S&P chart, we've got some pretty significant directional movements where you might think, okay, the markets are making this strong bear run, and then we get side railed, and then it goes back, and now recently we've had this virtually parabolic up move in the S&Ps, and it's like, when is this thing going to reverse? And it looks like we did get a kind of a bearish reversal today off of a 4900 century mark. But in any case, when I look at this, because I've been doing this for a number of years, I see price action pivots all over the place. And so number one, we want to take into account when we look at a chart and we're learning something, we're doing it with the benefit of hindsight, okay? And most of the time when you use the benefit of hindsight with like an indicator or a strategy you're learning, it will often look incredible in, with the 2020 hindsight. And then when you go to do it in live markets, it's not working out the way that it looked when you were learning it. All right. This is different. Okay. So what we're going to look at will look exactly like we're looking at in hindsight in live markets. And the reason for that is we're using price action and we're using forward-looking data and information to make future projections. So whether this happens right now in the live markets or we're looking at it in hindsight, there's not a difference. It's going to look the same. That's not the true, the true case for most indicators out there, or even a lot of strategies. Okay, so what does it look like? So I mentioned 5 candlesticks. Let me get a drawing tool up here. Okay, there we go. I get my pen. All right, let me see what color this is because I want to see if you guys can see it. Purple. I guess we could do, I like to use yellow usually. Let's see here. I just want to make sure you guys can see this okay. There we go. Let's go. I'm gonna start with yellow. If you guys have any trouble seeing this, just let me know. And then I'm gonna actually zoom in here. So we can see these. And I'm going to start with some obvious ones. We'll just start with a recent obvious one. And then we can look at some less obvious ones. Okay, but the rules are all still the same. So let's go over those. All right. So we just recently had a bullish price action pivot on the S&Ps. So let me just point that one out here. And it's right here. Without even knowing what it is, you could probably see that pretty easily. In fact, I'll just go ahead and arrow the recent bullish price action pivots that we have had. Let's see, there's one. That one's a little less obvious. There's one that's a little less obvious. There's one. There's one. Okay, so those are some quite obvious to fairly obvious ones over this time frame on this daily S&P chart we're looking at. Okay, so imagine if you actually spotted these and could have the information and could trade these to the long side. Okay, well, I'll show you how to do that. So let's clear these out. All right, and let's just look at the recent one. So we're going to look at this recent bullish price action pivot. All right, so this is our pivot candle. All right, and I mentioned it's a minimum 5 candlesticks, which I, again, will elaborate on here shortly, but I want you to just understand what's happening first. All right, so prior to this pivot candle, Okay, we're just going to label this our pivot candle. PC will be our pivot candle. Prior to that, what was the S&P doing? It was in a downturn. Well, how do I know that? Well, we were making a series of lower highs and lower lows. Okay, that should be fairly easy to see for you guys. Lower highs, lower lows. Okay, so we're in a downtrend. All right, let's pretend that we're back on this day. So that the recent 5 trading days haven't occurred yet. So let's just go to right here. Okay, and of course that messes up all my drawings. All right, so let me fast forward just one more day because I want to get that in there. Okay, so we're making a series of lower highs, lower lows. And in fact, in a downtrend, all I really need to track is the lows. So if we're making lower lows, all I'm doing at this point is notating that the markets, the S&Ps are making lower lows each consecutive day. However, on, it was this January 18th, that changed. So what happened here is S&Ps rotated higher and made a higher low, right? So now we've gone from a situation where we're making consecutive lower lows, and now all of a sudden we've made a higher low, right? Now we've got 4 candlesticks here, right, that we've mapped. So we don't have a price action pivot yet. What happens on this day, January 18th? We'll just label this 118 so you can see it. When we make a higher low, what else is significant here? Well, if you look at the January 18th candle, and by the way, it doesn't matter whether any of these candles are bullish or bearish. This could have been a bullish candle or let's just say this could have been a bullish candle with a lower low from the previous day. That's fine. This could have been a bearish candle, right? So that whether the open relative to the close is higher or not doesn't matter. All we need to do is look at the lows. Okay, so we're making lower lows. Now, when that changes on January 18th, here we're going to take a step back to the previous day because now we've got a candlestick with a higher low. So what does that do to this previous candle? It makes it our potential pivot candle. So this is now a potential pivot. It's not a confirmed pivot. Okay, so we're going to use a few acronyms here. Potential pivot, PP. CP is a confirmed pivot, which is identical to pivot candle, PC. So we'll kind of use those interchangeably, but I'll explain. So right now, this is just our potential pivot candle. Okay, and why is that? Well, oftentimes you'll see this kind of a market shift and then a resumption of a downtrend or vice versa if we're looking at a bearish pivot setup. Right now, we're looking at bullish examples, right? So what we want to see, and let me clear these out and then fast forward. Now we're going to go forward in time here. Okay. What we want to see is, number one, for a bullish pivot, we want to see 2 candles to the left of our potential pivot. Because remember, on January 18th, this is our potential pivot. It's right. So on the day of January 18th, at the market close, this is only our potential pivot at that point. Okay, and at that point, we want to just know that if we're looking at this as a potential bullish pivot, and the prior 2 candlesticks were the lows higher than the potential pivot candle low. Well, yeah, they were. Okay, so here's our candle 1, here's our candle 2, here's our potential pivot candle, which will be candle 3. And then on January 18th, as the market closes for that day, we've now got a higher low than our potential pivot. So this will be our candle number 4. For confirmation, we need one more higher low for a confirmed price action pivot setup. And that came in on the next trading day. Okay, so we have another higher low. Again, it doesn't matter if this is bullish or bearish. All right. And now this is now not a potential pivot. This is a confirmed pivot candle. Candle number 3 was a confirmed pivot candle. And we've got, let me see if it will allow me. No. We've got a confirmed price action pivot setup right here. Bullish price action pivot setup. All right. So that's what it looks like. I'm going to get into the entry rules and the management rules here in just a second. Let me clear this out and let's look at some others, right? So some of these may not be as obvious. Let's actually look. This one looks close. If we take the low here, which is 45.46.72, 45.46.50. So this one is not obvious, but it's a beautiful price action pivot. So let's take a look at this one. All right. So again, some of these will be subtle. Even in scenarios where it looks like we're just moving sideways, you're going to spot these once you get good at it and build up the experience. But look, so we've got a low, which I think is at 45.46.72. Okay, we've got another low, and this is a bit of a nuanced one too. So the 2 candle lows to the left of a potential bullish pivot candle don't have to be consecutively low, as long as they're both higher than the potential pivot, which in this case, and I'll just double check that on this candle, but that should be. So the low of this potential pivot is 45.46.50. Here we've got a low of 45.51.68 and a low of 45.46.72. So this is just 26 ticks lower than this candle. But the key here is that candle 1 and 2, okay, we'll label this candle 1, candle 2, have higher lows than our potential pivot. But on this day, and what day was this? It was the 24th of this, or sorry, the 6th of December. So December 6th, okay, and this is a bearish candle, by the way, which makes it even more exciting because I'm going to really throw something at you that will trick a lot of people. So potential pivot. So on December 6th, all we know at this point is we've made a lower low than the previous 2 trading days. That's all we know on December 6th. Okay, so we're just keeping an eye on this. Now, on the next trading day, everything changes. We make a higher low. Okay, so now we've got, remember our potential pivot, candle 3. We've got candle number 4. So things are starting to set up. But we don't have a confirmed bullish price action pivot yet. We need candle 5 to make a low that's higher than our potential pivot. Well, sure enough, it did that. Right. So now we have a confirmed price action, bullish price action pivot setup. Okay. There is a little nuance in here, which is where I mentioned a minimum of 5 candles, which I'll talk about here in just a second. But for purposes of learning, and there's different ways to trade this too, so I'll give you those. But for purposes of just learning what the basics are, for a bullish, okay, price action pivot. So this is a bull price action pivot. We've got 2 higher lows to the left of our potential pivot, 2 higher lows to the right, which transform this into a confirmed pivot, bullish pivot. And now we've got a nice setup. This one was not very obvious, right? It looks just like sideways choppy price action, but it wasn't. And then of course, look what happens. All right, so hopefully you can kind of start to see these. So here's another one. Here's candle 1, candle 2. Back in early November of last year, this was a potential pivot. When the next trading day rolls around and we get a higher low, and then it becomes a confirmed candle 4, candle 5, bullish price action pivot. All right, and nice move. Here's another, this one's obvious, okay? So we're making a series of lower lows. Same thing with right around late October. and it looks like October 30th rolls around, everything changes. We put in a higher low. So again, this is candle 1 to potential pivot, candle 4, and candle 5. Okay, beautiful. We've got another bullish price action pivot. All right. Those are just some of the examples. Okay, so now let's look at, let me actually pause there and see if there are any questions. And then we'll move on to the entry criteria. Let me take a look here. Alan's asking, does candle 5 close need to be higher than candle 4 or only higher than the pivot candle? Good question. So for bullish and this is where it gets a little bit tricky or maybe confusing for some, is for a bullish price action pivot, okay, the opens and closes are irrelevant. They don't matter. The lows are what matter. So we just are looking for lows. And that's actually, I'm glad you asked that question because I briefly mentioned it, but then moved on and skipped over it. So this potential pivot candle here, this is a confirmed bullish price action pivot, is a very bearish candle. And likely, you know, after a big bearish reversal day like this, there's going to be shorts coming into the market that are obviously, now we can see as the S&Ps ran up immediately starting the next day, there's probably a bunch of short squeezes going on here as markets ran up. So this is a bearish candle. The 1, 2, 4, and 5 candles were bullish, but it doesn't matter. So for a bullish price action pivot, all you need to pay attention to is the lows of each of the candles. And it would just be the opposite. We'll look at a bearish one too. Here's a great bearish price action pivot. All right, right here. Here's the pivot candle. All right. So all we need is, for a bullish, is lows higher than the pivot candle on either side of that pivot candle. And it would be the opposite for a bearish, right? So the highs, for a bearish price action pivot, we're tracking highs. So the highs need to be lower than the pivot candle high. Okay, and this gives us this is a confirmed bearish price action pivot. We'll come back to that here momentarily. But like right now, we're in the midst of an actual open bullish price action pivot on the S&Ps off the daily chart. And this could turn into a bearish price action pivot here. It's too early to tell, but that's what I'd be tracking at this point, right? Because now we've been making a series of higher highs. All right, but what if tomorrow, just hypothetically speaking, like we get a lower high, and then we get it again, what's today, Wednesday, Friday's trading. Okay, then we've got a confirmed bearish price action pivot, but we don't get into the market yet, to the short side or the long side on any of these. And that's where we're going to get an entrance criteria. So yeah, good question. Looks like maybe a couple more. Dave's asking, so the lower low sequence is somewhat flexible before the price action pivot candle. Exactly, yeah. And that's where kind of some of these nuances come in. And I wanted to share the different examples because like here, we weren't actually making on this one here consecutive lower lows. All that's critical is the lows of the 2 candles to the left of a bull pivot candle are higher than that pivot candle low. And then, of course, to the right of the pivot candle, we need the same thing, higher lows. And then the opposite with a bearish price action pivot. Sometimes it'll look picture perfect like this one does. Okay, so there we are making consecutive lower lows. Not only that, we're making consecutive lower highs, but again, for a bullish price action pivot, we don't need to track the highs. We track the highs for the bearish price action pivot. So this one just looked perfect in every way because not only are we making lower lows, we're making lower highs, and the candles are bearish on the way down and bullish on the way up. I mean, this is as picture perfect as it gets. This one's pretty ugly, but also beautiful because look at the move that it projected to the upside. Okay, and it was hard. It was a little bit harder to spot. So another good question there from Dave. Joe's asking, is the price action pivot usually a red candle? So again, candle color doesn't matter. In other words, and that's why I said you can use OHLC charts. Those are just line or bar charts. You don't even need to see the color of the candle. You also don't need to pay attention to the open relative, or the close relative to the open, I should say. So yeah, the same thing. Craig asked a similar question. Does candle 5 low need to be higher than 4 or just higher than 3? So 3, remember 3 is our pivot candle, so it just needs to be higher than 3. It doesn't need to be higher than 4. So hopefully that makes sense. Looks like kind of a lot of similar questions, and hopefully that kind of clarified it for you guys. All right, so let's now look at the entry criteria. So let me clear all this mess out here. Erase all drawings. Okay. All right, so let's just use this picture perfect price action pivot here from back in October. All right, so we've got here, and the beauty of this is it's pretty low maintenance. I mean, if you're doing this on an intraday chart, you got to be a little faster on your feet. Certainly as you get, into like short time frame, like you're doing it on a 1 minute chart, 5 minute above, it's pretty ample time, right? Certainly off a daily. So I'm just looking at the lows and just noticing, okay. And by the way, this can keep you out of a lot of bad trades. Look at this. So here was, if I were tracking this at the time, I would be seeing, okay, we're making a series of lower lows. Okay, now I'm paying attention. My ears are perking up because we just made a higher low. This is now on back, around the third week of October, a potential pivot candle. This is what I was just talking about in more recent times on the S&Ps. Often we see this happen. This is a trap. So this is where a lot of people get trapped. Okay, the trend is shifting. It's going to go back the other direction. And then it traps everybody and the sell-off resumes. This is exactly why we use two candlesticks to the left and right of the pivot, right? We never got a higher low to make a 5 candlestick confirmed pattern. Look what happened. Candle number 5 would have been candle number 5 had it not broken below the potential pivot, right? Just proved this setup wrong and kept us out of a bad trade. Okay, so we're out. It doesn't even qualify as a setup. So right off the bat, it keeps us out of that one. All right, but then let's clear this out again and then go back to this one. Okay, so now we've got, okay, so again, I'm just purely tracking lows because we're making lower lows. If we were making higher highs, like back here, I would be tracking highs, okay? But we're not, we're making lower lows. All right, here's where everything changes. Right on October 30th, we make a higher low. This now becomes my potential pivot candle. This is my candle 1, my candle 2. So we're kind of reverse counting once this new higher low gets put in place. And then I'm just waiting for the next candle. Okay. And there it is, higher low. So this becomes our, yes.
I've got a quick question from YouTube, and I didn't know when a good time to break in.
Oh, sure. Shoot.
So I just broke in. GA wants to know, are you basing the lows on the candle body or the candle wick?
I heard the candle body, and what was the second part?
Or the candle wick. So are you looking at the lows or the bottom of the body?
Yeah, the wick. So okay. Whatever the actual print, the price print in that time frame was, the very lowest time. So like, if we look at, like, we'll just use this one we're looking at, right? So here's where I'm looking at the low. So that's actually the wick, and it's the low on October 27th of last year, which printed at 4103.78. So I'm looking at the actual price print or the low from that candle. So obviously, if you're doing this on a 5-minute time frame, let's say, then you just wait for that 5-minute candle to print, and then take the lowest low from that 5-minute period of that candle. So we're using the wicks. It was another way to say it.
Okay.
Cool. All right. So here we've got, again, a picture perfect bullish price action pivot. Now, if we want to trade this, how do we do it? Okay. So again, we've got candle 1, put these in here, 2. There's our pivot candle, 4, 5. All right. Now, I use 2 different approaches for entries, okay? And here they are. So one is to enter above the high of candle 5, okay, for a bullish setup, okay? So that means on the next candle, in this case, a daily chart, so on day 6, I'll get in, and this is where we'd use what's called a buy stop order. Okay, and depending on I don't have a set in stone rule for this. It depends on the asset and the volatility of the asset. I just want to give myself a little bit of margin. So I often will just visualize it. I'm just going to go up above that high of candle number 5 a bit. And if the S&Ps trade up to that level, I'll put a buy stop order in at that price. So this one would be like right around 4,200 and change on the S&Ps back from October of last year. If we come up and hit that, then I go long. Okay, so that's the standard approach that I use with price action pivots. Another way to do it is, and I kind of refer to this as more of a aggressive entry. Another way is to take whatever the high in the entire 5 candlestick pattern is, right? So this extends back to this candle number 1. And if we use that high, we would actually get in at a higher price level. All right. And so obviously in this case, we would have been better off using candle 5 as our candle 5 high, and then padding that a little bit is our entry level versus candle 1. So it kind of depends on, how much conviction you have behind the signal, whether there's other supply and demand points or horizontal support and resistance that you might encounter. So either way can be good. Like in this one, I can see that, okay, it looks like there's actually some pretty strong resistance here from these prior lows back in early October. And if I enter with some padding above the high of candle 5, I might run into that, encounter that resistance, which was prior support from back here. So maybe I do want to use. So there's obviously some discretion that you can use, but the standard basic way to do it is use the high of candle 5 for a bullish candle, pad it a little bit, okay? Because the high from this candle 5 was 41.95.55 was the high from October 31st candle. All right, so I can bump that up a little above 4,200 and go long if S&Ps trade up to 4,200. Okay, and that's a beautiful price action pivot because that's the entry, and it just works the opposite with a bearish setup. Okay, and I see actually a really nice bearish one here. Let's look at that real quick. We'll do this more quickly since we're kind of starting to get a feel for this now. All right, but again, this is not an obvious one. It looks like a lot of choppy price action here, right? Okay, in fact, we were making, and here's actually something interesting. This is a transition bullish price action pivot confirmed to a bearish. However, it kept us out of the bullish setup. Let me just explain this one real quick. All right, so we're making, ignore that one. So we're making lower lows. Okay, so what am I looking out for when we're making lower lows? I'm looking for a bullish price action pivot setup. Well, we make a higher low. Awesome. Okay, now I'm paying attention. Are we going to make a higher low on candle 5? Yes, we did. So again, we've got 1, 2. We've now got a confirmed pivot because the low is lower than candle 1, 2, 4, and 5. We've got a confirmed setup. Where's our entry? Well, it'd be up here above the high of candle 5. So we have a confirmed valid bullish price action pivot, no trade. We are not in a trade here because we didn't trade up. So it kept us out of the market again. How cool is that? Keeps us out of a trap. But while that's happening, right, what's happening? Well, as we looked at in the second half of that bullish price action pivot, we're making a series of higher lows from this low candle back in earlier October. All right. But now what happens? Because we're making higher lows and also making higher highs, I'm now looking at this, and this is an overlapping bullish to bearish price action pivot. I'm looking at the higher highs that we're making, and notice around the middle of October that all of a sudden we make a lower high. And then what do we have? Candle 1, 2, confirmed bearish pivot. And by the way, look at this candle. It's a very bullish candle, right? That's a big move up in the S&Ps on, it looks like October 16th. But the next trading day, we make a lower high. Then we make a lower high. And now we've got a 4, 5, I'll just put that there. confirmed bearish price action pivot. And if we place our sell stop here on a bearish setup, we use a sell stop order with some padding below the low of candle to 5, we've got a bearish entry and a beautiful move down. All right. And then that led us right into the bullish one. All right. And they're all over. Okay. You can see these all over. Here's a great bullish one. No trade. Kept us out again. All right. And of course, we looked at the others. So as you practice these, you'll start to see. I'm about to give you something that's going to make this much easier for you. Because we're going to throw in another tool that is going to take just this, what's already a very powerful price action strategy, and boost it up. And as Emerald Lagasse says, kick it up a notch and take this a whole step further. But one more thing to cover first. Okay, so trade management. So we know how to identify the setup. We know how to enter the trade if we're going to take a trade off a bullish or bearish setup. Where do we get out? Where do we define our risk? All right, so let's just use this one again, this bullish one. All right, so we get candle 1, 2, confirm pivot, candle 4, 5, entry. All right, so what I always do when I enter a trade is I define my risk first before I ever think about profit potential. So stop loss. I prefer to place my stop loss below the, and again with some padding, below the printed price low of the pivot candle. All right. So again, here our candle is, our pivot candle low is 4103.78. So I might place, my stop loss at, let's say 4102. Okay, just a little padding below, or maybe even 41. All right, so a little below. Then what I do is I look at my entry price. Okay, so that's again right here, right around 4,200. And I take the difference. So what is the difference? This is my defined risk, right? This is where my stop loss is going to go for a bullish setup. Okay, 41 to 40. So we're looking at about 100 points. Okay. So I look to get out at a minimum of a 1-to-1. And I'm just going to roughly eyeball this. So we're going up to like right here, 4,300, right? Okay, that's about 100-point profit on the S&Ps. All right, and so I look for a 1-to-1 risk reward, but on top of that, because you'll see a lot of these price action pivots will go on to make additional, in this case, a pretty extreme additional directional move. I'll often scale out, right? So I might close half of my position at a 1-to-1 and trail my stop on the remaining half, okay, and get out on a trail. Or if I see a conflicting price action pivot setup, right? So if I get a bearish price action pivot setup while I'm in this one, that could be an exit criteria as well, right? But initially, I'm just looking to get this 1-to-1. And here in just a second, I'm going to pause again for questions. We're going to throw in another tool that's going to make the whole management and identification of these setups even more powerful. All right, in just a second here. So the stop loss for a bullish below the pivot low. So for a bearish, like we identified this one back here, right? This is our bearish confirm pivot. Okay, so stop loss would go above the high of the pivot candle, which is this candle here, right? Entry down here. Entry down there. So stop loss to entry distance, right? We add that as our profit target 1. Okay, we hit that one easily as well on this bearish one. Okay, so just everything works in reverse. All right, so that's the setup. And now we're going to throw in something else really cool. So before I do that, I'm going to pause there for questions and see what I can answer. And then we're going to kick it up a notch. So let's see. Jeff, while I'm looking through on my end, any come through YouTube on your end?
No, not here. Not yet.
Okay. Let's see. Nelson's asking, does the time frame suggested could be any? Yeah, you could use it any time frame. And sorry, it always takes me longer because I really want to, I probably over explain things, but I'd rather do that than have you guys not understanding. So I always end up going longer than I anticipate. I didn't get to intraday charts, but we can look at those as well if we have a few minutes. Let's see. Oh, Craig's asking, what about the 3 days earlier? Okay, so that's, Craig, a great segue into what we're going to be getting into now. So we'll get into that, how we can use 3 days of advance notice on these as well. Tony's asking, how much of a padding do you use? So Tony, as I mentioned, really just eyeball it. I look at, but I take into consideration the volatility of the asset, the volatility of the market. So like on the S&Ps, you know, if we're in volatile market conditions, and that'll be obvious when implied volatility levels are high, or you're seeing wider high-low ranges on the candles, a market sell-off, etc. So I look at those, but what I try to do is just give it, you know, just kind of so you can eyeball it. Like on this one, you know, like I said, right around 4,200. On the short one, you know, I probably just go down to around 4,265. So I just give it visually just a little gap there. But I try to avoid support and resist. So I don't want to take a short price action pivot into a support level. I don't want to take a bullish price action pivot into a resistance level. So I'm looking at support and resistance levels as well. And big round numbers. Like, so, you know, I don't want to necessarily, you know, take a bullish trade right into a century mark on the S&Ps, which is at 4,200. So maybe I want to put my, you know, buy stop entry a little bit higher on this bullish price action pivot to get above 4,200, being that that's a big, you know, often, you know, indices like the S&P gravitate or magnetize to big round numbers. We call them century marks, like 42, 43, 4,400. So yeah. Just a, you know, a little discretion there. If you want to use like an exact thing, you could use an indicator like average true range and take, you know, percentage of the average true range of the asset. So there's different kind of methodologies, but to be frank, like I just really eyeball it. But I also use another technique that does give me an exact price point. And this is where, you know, this will come in into the Metastock platform. In fact, we developed Trade Trend initially for Metastock, and I'm going to let Gibby show this on the Metastock platform as well, but I want to explain it to you first and then show how we can use this with price action pivots. So this indicator, the trade trend indicator, is in no way related to price action pivots. It doesn't use any of the same logic criteria. It's completely separate. And this is where it becomes powerful, because often what people do is, you know, they'll gravitate to like a trend indicators or momentum indicators or reversal indicators or oscillators or what overbought, oversold oscillators, right? And of course, there's an abundance of those types of indicators across all of those different niches, and they'll combine them into you know, one decision-making process when you're really just combining a lot of the same data with different algorithms. So what I find very powerful is to combine like a trend or momentum based indicator that is designed to be forward looking, and then use that in conjunction with price action pivots, right? And in fact, so I just added the trade trend indicator on the chart here, and incredibly, and fully honest here, I did not even pre-plan any of this. I'm just looking at this off the fly. But I'm noticing that like on this one we just looked at, there's a forecasted buy signal right around this price action pivot. Okay, this is just added confirmation for me. Okay, so we get a forecasted buy arrow, confirmed entry. A little bit after the price action pivot, but incredible run up. What this indicator also does, aside from give you forecasted buy or sell signals, and those are the red and green arrows that you see on the chart, it gives you, that's the up to a 3-day forecast on a daily chart, right? So if you're trading intraday, like on a 5-minute chart, it's going to give you up to 15 minutes of advanced warning with the red or green arrow. If we get a confirmation into the suggested entry being an anticipated move after a little bit of a down move, but no trigger. So these signals are good for up to 3 candles, and they've got to come up into the entry price. In this case, that would have been right up here around 43.36. So we didn't get a confirmed entry. This is just the forecast. Here we have a confirmed short entry. Here we have a confirmed long entry. And then we've got trailing stop levels, right? So it's actually printing these. And if you look at how incredible this is, you go over, and this one, of course, ran again, and we got another buy signal. Before this, the S&Ps went flat here. Notice how this trailing stop algorithm trailed right up to the lows, and it would have been stopped out up here with an entry like all the way down, just a little above 4,200, and out with over a 300-point gain in just a couple of weeks, right, on this using the trailing stop. Here's a couple more signals that didn't trigger, so these were non-confirmed. But what's cool here is that when we use the trade trend indicator algorithm, which is designed for trend and momentum reversals, bullish and bearish, combine that with bearish price action pivot setup, because remember, we looked at this bearish price action pivot setup here, back here in mid-October. Just coincidentally, again, there's no correlation between the two tools. We also got the sell signal, right? Here we didn't have a bullish price action pivot setup. It would have come in further back and looks like maybe not even triggered. No, not until later if we kept it open, but we did get another buy signal there, right? And then we got a couple sell signals on this double top, and then more recently a buy signal. So when we look at price action pivot setups and then combine a trade trend indicator with them, they become a real powerhouse. Here's, again, probably a less obvious bullish price action pivot setup, right? But lower lows, pivot candle, higher lows, non-confirmed, non-triggered. So there's the trigger. And in fact, there's our candle number 5, an entry, and beautiful up move with trailing stops to manage it before everything rolls over back to the downside. So that's what it looks like when we combine the two. And yeah, any time frame, right? We can go down to a 5-minute chart. And I loved it. I really love zooming out so you can see the accuracy of these. Look at this sell signal just from today's trading right at the top. That was also a bearish price action pivot setup, right? And we've got some counter trend opportunities in here as well. But if you just zoom out, in fact, let's just go like to a 15-minute chart, right? You can see the incredible accuracy of these signals. And when we combine it with price action pivots, it helps us weed out opportunities where, as I mentioned at the start of our session, when do we not want to be in the market, right? If we're not getting alignment of a bullish trade trend signal with a bullish price action pivot setup, let's just stay out, or vice versa, bearish price action pivot setup with a bearish trade trend signal, right? So Jeff, do you want to take just a minute and then I'll open it up to final questions and let everybody know how they can get these tools for themselves on the platform to kind of take a look at the Metastock platform?
Yes, I do. A couple of questions as we're getting over there. Joe wants to know if we can really brighten the levels. And I think when I show the arrows, they'll be much more visible. But David wants to know if you have a preferred time frame.
No, I don't. These things actually work, I think, equally well across all time frames. So to me, time frame is more of a personal trading style preference. And for me, I do most of my trading off daily charts, but you can certainly use these the trade trend indicator and the price action pivots across any time frame that you like.
Okay, cool. Let's see. Alan said, "Hey, really appreciate this content. Studying for my CMT. This is excellent supplemental information. Thank you, Jeff, and everybody."
Oh, great.
I think he's talking about you. What is that thing?
You've got 2 Jeffs here, but I'm sure he's thankful to both. So
let's see. Saburo wants to say, can you please explain the entries one more time? I don't know if you want to do that or in just a second.
Yeah, entries for the price action pivots or the trade trend, because when we combine the two, we want to actually use the trade trend entries because as Jeff is going to show here in a second, it's actually going to tell us the price to enter.
So I've got a chart up here on Meta, not Meta stock. Well, I've got Meta on Meta stock. This is
that. Yeah, why don't you show them where it shows the entry prices and everything?
So when we're coming up in here, just to kind of show you what you're kind of looking at, you're going to notice there's different annotations that happen on the chart. And Jeff, please feel free to chime in if I say something incorrectly, because I might. When you get a green diamond here, though, what you're getting is a setup. This isn't a confirmed entry signal. It's just telling you that there's a setup that's recommended, or that may come into play. Not recommended. That's not a word that we use a lot. There's a setup and a trade may trigger, okay? Right. And if I come in here, and I just want to get a little bit more information about that, I'm going to open up what we call our commentary feature here. And I'm just going to move that here to one of the setup bars. I actually think my chart moved a little bit when I docked that in. I'm going to resize it and make it work again. But right here, this is the bar we were looking at. And it's just going to say trade trend projects a move up. The criteria for a buy setup has occurred based on this alignment of technical patterns, including volume, volatility, momentum, and other trend factors. The probability of prices moving in the anticipation is currently at its highest. If we get an entry, the entry price will be 333.37.6. And then, but if we go above 343, we don't want to take the trade. So can you explain why you wouldn't want to take the trade if it gaps up to 343?
Yeah, it's not that you can't take it. We just suggest not if there's a big gap. So we have built into the algorithm a gap feature where if you're trading in like an equity that only trades during U.S. equity market hours, and due to overnight events in the futures market, for instance, there's a big gap, directional gap in the morning, and maybe it's in the favor of what the signal forecasted, but now that gap, is not tradable and it's already made a big move. We don't want to jump in too late, on that buy or sell signal. So we just suggest, waiting for the next. So that's why it gives, as Jeff pointed out there, it gives you that max entry price as well.
Yeah, if you have a huge gap, your risk reward is going to be messed up too.
Right, exactly. Mm-hmm.
And then notice here, if we get into the trade, so even before you get into the trade, and I really like this, you're going to get an initial stop value, which is going to be 313.52. So the next day we don't trigger the trade. So we still have a setup that's active. I believe it's 3 days that it stays active. Do I remember that correctly?
Yeah,
Okay.
It's actually 3 candlesticks. So yeah, exactly. On a daily chart, it would be up to 3 days of advanced notice on the buy or sell signal. And on an intraday chart, like if you're on an hourly chart, let's say, you'll have up to 3 hours of advanced notice from a buy or sell signal with an exact entry price, to get in on that signal.
Okay, so then when we trigger in, we're going to get the arrow. It's going to give us the stop loss. This stop loss will move. So as we kind of get into this trade, if I come up here, you'll notice that it's moving the stop value up. So here it's like 344 as well. I also want to kind of call your attention to the color of the charts. I really like this about trade trend. When we have when we first get into a trade, you're going to have like these bright green bars. And as kind of that trade kind of loses momentum, those are going to shift to kind of more, these kind of more bluish, not as vibrant bars. I was looking for the right term for it, but that just indicates that, well, it says right here that the market has turned adverse to this position. The stop order is very likely to be triggered. It's kind of a visual signal that you're losing momentum in this trade. Is that a good way to put it?
Yeah, exactly.
Here, the next day you had you did hit the stop. You had a setup to go short, and this one didn't work out. But here you have another one, and so that's kind of how trade trend works on a chart. And I also want to show how to find setups, because I think one of the things that you really get in Metastock is you have the ability to do any type of scanning that you want in any market, anytime. It's not something that's scanned on a server and you get yesterday's results. You can run this at any time, and you can run it on any market that Refinitiv supports, and they support a huge number of markets. So let me show you how that works real quick. And what I've done here is I've opened up the Power Console. There are 4 setups that are available. So if I wanted to kind of just talk a little bit more about what this does, if I wanted to find a setup, so maybe I want to kind of keep an eye on a watch list of stocks, and I just want to find setups that might trigger during the day tomorrow, I'd run the setup scan for a long. Or there's also a setup scan for short. Okay, so you can do that. If you're kind of during the day and you want to find stocks that have triggered today already, you can run the signal scan, and it'll look for something that has a setup in a bar or a candle 2 or 3 ago, and then have also triggered. So you can run the scan during the day to find either something that's already triggered or something that might trigger, depending on kind of the scan that you run. Okay, I've run now 4 of them. And just to kind of give you an idea of kind of the markets that are covered, we get a lot of people all over the globe that want to trade this. And one of the things that's another advantage to this is just the depth of data. So if you're in India, we actually have some of our team out in India right now doing some classes. But if you're in India, you're probably not watching right now live. You might be watching tomorrow just because of the time difference. But if you wanted to come in, you could scan Indian stocks. They're right here in what we call our Asian package. You could also do Hong Kong or Singapore or Australia, anything that you want in any time frame that you want. So for the purpose of just kind of getting ready to show you stuff and kind of how it looks, right now I've actually ran all 4 of these scans, the setups, the signals, the setups, the shorts, and the markets that I ran it against. It was just kind of a standard list that I do normally. The Dow Jones Industrials, the NASDAQ 100, and the S&P 500. Okay, and so I'm not going to run the scan. I've already done it. It doesn't take very long. But what I'm going to do is I'm actually going to show you the report. So let's say that we had run the setup scan. The market's closed. We want to build a watch list of stuff that we can look at tomorrow. This is the one that we'd run. And what I'm going to do is I'll just show you the report. And here we've got a list of stocks. Out of that big list that we've kind of put together, you'll see that about 378 were rejected. About 142 had opportunities. So here's basically where the close price was for Warner Brothers. It was 1041. If it gets to 1061 in the next couple days, you're going to have an entry. The max of that entry, if it goes up above 11, it wouldn't be recommended based on the algorithm, and your stop is here. So if I wanted to kind of take a look at these, kind of build a watch list out and kind of just watch for these to enter tomorrow, this is how I would do that. So there you go. Gerald asks, I'm going to answer your question because I know the answer, Gerald. Is a replay available? I was off by an hour and missed the front of it. Absolutely. Within actually about an hour of when we end, we'll send you a replay. We'll send you the replay, and it's basically on a YouTube channel, and there's the link for it right now if you want to watch it as soon as we wrap up here. But yeah, within about an hour, automatically everybody that's here is going to get an email with the recording. So Jeff, that's kind of, I think that shows everything I wanted to show in Metastock.
Yeah, so. Perfect. Yeah, and I'll just reiterate. I mean, it's an incredible platform. The scanning features, you can run system tests. I know we kind of went over a lot of time, but I want to save time to answer any final questions and show you guys how you can get all of these tools for yourself. But you can run back tests, all the scans like Jeff showed you. A lot of really cool tools built into that. So I really love it. And then you get the commentary, so it actually shows you, as Jeff demonstrated, the entry prices, the stop loss levels. It writes all of that out for you, so you can literally just look at it and put your orders in with your broker, or you could even read them to your broker, whatever. However, is easiest for you. So yeah, thanks for that demo, Jeff. That was really good. I'll take the screen back if I can, and then let everybody know how they can get everything. And actually, we're going to show how you can get a bunch of other really cool stuff as well. So let me go back over to our slides. All right, so what we've done is we put together a package. So I wanted to, number one, teach you guys the price action pivot strategy. And then number two, I wanted to show you how you can really beef that up with the trade trend indicator to get your exact entry price levels, and use a different methodology to build on price action pivots to actually get in on these directional opportunities on any asset, any time frame. And again, I'm more than happy to stay as long as you guys are willing to, and look at any other charts or timeframes that you want. But let me just kind of highlight first what the trade trend signal software does, because we of course have limited time to look at these examples. So I want you to really understand what it is and what makes it special. And that is, number one, you get buy and sell signals up to 3 candles in advance of a trend. Okay, so this is really sets it apart from other indicators because, again, most indicators, in live markets try to tell you what to do right then and there without really any actual true forecasted trend direction, because the algorithm isn't really doing that. It's just aggregating past price data and using that information, right? So this is what really sets it apart. And it does so with a momentum algorithm that, number one, looks at the market in real time. So again, you can use this all the way down to a tick chart if you'd like to. It also gives you the trailing stop levels. So when you get into a successful trade, how do you manage it? When do you get out? Right? These are critical questions that are going to impact your long-term success. And it provides that algorithm in addition to the entry levels, right? So you don't just get the entry price and the stop loss. You actually get all the information to manage the trade. You can predict short-term trends, long-term trends with astounding accuracy. You can use it on any asset class: equities, ETFs, futures, forex. In fact, it works incredibly well in the futures market and forex markets. I use it in futures almost on a daily basis across any time frame. I also use the trade trend indicator. I do a lot of options trading, so I use it in the options market to make my option trading decisions. It doesn't repaint, right? So once you get a confirmed signal, it's there. It's on the chart. You can go back and review all of the signals. It gives you built-in protection to avoid whipsaws. It captures most of the trend before it reverses, as we looked at on the S&P charts. And you can see that across, again, all asset classes, all time frames. It's designed to limit losses and let your profits run, okay? And it does that through a very effective and reliable algorithm. You can use it with other indicators or systems, and that's why I provide the trade trend indicator with my price action pivot system. Again, they're an incredible powerhouse when you combine them together, and ultimately help you trade without guesswork, like unfortunately so many of us do, as emotions and self-doubt and things enter our trading world. And it's very difficult not to do that. Even as a professional and a hedge fund manager, I have to fight that all the time. So I'm always looking for tools to help combat that. And that's, my goal obviously today is to help give you those and cut the learning curve, and help you start trading, as early as tomorrow, because we can get you set up with this stuff and up and running for the markets tomorrow, so that you're making more consistent, accurate, and reliable trading decisions. But there's more. So we built up this very incredible package that not only includes an entire year of trade trend on the Metastock platform, which normally we retail for $1,499. You're also going to get live trade sessions with me personally every Tuesday at 7 Eastern. So like we did tonight, we do these every week, okay? And we teach different strategies, different methodologies, I reveal a lot of my tricks and tactics that I use across different markets, different asset classes, different time frames. And normally we retail those sessions for $550. You're getting those as part of the package. You also get personal coaching from me on those. So I host those, I run them myself. So you get direct access to me. You can ask questions, interact. We do ticker roundtable, as I mentioned, so we can look at charts together. Only thing I can't do is give you personal individualized financial advice, but happy to answer questions and lead you down the path of success. You get access to our invitation-only private Facebook group if you're a Facebook user. And we have over 800 members who use the trade trend indicator and our other strategies, including the price action pivot strategy. This is a big one I'm also throwing in, and I don't even know why I did this, but I guess I feel very kind because I'm throwing in an online course, which is our professional trading series. It's taught by me. You can watch it at your leisure. It's over 10 hours of content. So multiply what we did tonight by 10. It covers a variety of other asset classes and markets. So you get, forex, equities, ETFs. You get options. I teach all of this using these tools and different strategies in our professional trading series. Normally we sell that for $900. And ultimately, you get to learn to trade whatever market you're interested in, whatever time frame you're interested in. And of course, we can't put a price tag on that. I'm going to throw in 2 bonuses to the package. Bonus 1 is my top 2 weekly trade trend picks. So the trade trend indicator that we just looked at in combination with the price action pivot strategy, every Monday evening, I go to work and look through all of the trade trend signals across equities, ETFs, different markets, and find the top 2 buy or sell signals for that week, and I send them out to our members. All right, and so it's an alert service. You get the alert, you get the exact entry instructions, the entry price, the stop loss levels, the profit target levels. You get everything in these alerts for my top 2 picks for the week. So we send out 104 of these opportunities a year. You're going to get 104 of them over the next year. Normally we retail that alert service alone for $9.97. But we're throwing that in as a bonus. So it helps you get up and running more quickly and start taking trades if you just choose to do so as you're learning the indicator and the other systems that I'm teaching. I'm also throwing in my latest ebook, How to Create Risk-Free Trades, which is a great supplement to this package and walks through money management and capital allocation tactics to mitigate risk and even reduce or eliminate risk from trades. Normally we retail that ebook for $97, but that's also part of the package. So we built this all for the Metastock event tonight with a retail value of over $5,000. We're cutting it by 80%. So this breaks down to only $83 a month, and you get all of this on the screen that you see for an entire year. You're grandfathered in. You'll never pay the full retail price. You get the 80% offer as long as you choose to do so. No contracts, no commitments. You're not locked into anything. I'm going to go over a guarantee here momentarily. But you get this for an 80% discount, which, again, we don't do very often. And we do limit the seating to these packages because there's a lot of setup involved on our end and on Metastock's end, because they obviously provide you the white glove treatment to get you up and running with the platform and the indicator. So we, for that reason, limit the seating so that we don't sacrifice good customer service. So 25 seats are available tonight by going to altostrading.com/Metastock. And you get everything here in the package. You get the indicator. You get more of my strategies beyond what I've taught tonight, the price action pivots. You get all the bonuses, over a $5,000 retail value for 80% off. So really incredible deal. We also offer a 30-day unconditional money-back guarantee. So for any reason you think that this is not the right indicator and package for you, we do give you a full refund, 30 days, no questions asked, so that you get a chance to take a look at everything and see how incredible it all is. Because I think I've undersold it. I think it's much better than what it is, but I'd rather do that, and have you just be blown away, which I have no doubt you will be. In fact, we don't get 30-day refund requests hardly at all. And if we do, it's usually because of a hardship from one of the members, that unfortunately they have to stop trading for one reason or another. And that's fine. If whatever happens, we will honor that guarantee. You, of course, get the 2 bonuses, my top 2 trade trend picks every week. We send those out Monday evenings. I handpick those myself. You get my latest ebook. And just in the interest of time, because I don't want to sacrifice time for any questions or anything you guys want to talk about. I won't go through all the testimonials, but we get hundreds, if not thousands, of testimonials from our trade trend users and people who use trade trend on Metastock. Just very exciting. And I, of course, want you guys to be one of those success stories. Here's our contact information. It is, of course, after hours. So if you have questions, and Jeff Gibby is going to give you their toll-free number to reach out as well. And maybe, Jeff, if you want to put that in the chat for everybody so that they can reach out by phone. But here's our email if you guys have any questions. Happy to answer those for you when we open the doors again tomorrow morning. Here, once again, is the package, and I'm going to open it up to questions. So as I'm looking through these, Jeff, any you want to relay it to me from YouTube?
Yeah, actually, Santiago asked, and I answered this question already, can this work on 5-minute charts?
Yeah, absolutely. So yeah, as I mentioned, in fact, the price action pivot strategy and the trade trend indicator are both designed as fractal tools. So they can be used equally effectively as or across all time frames. So the time frame should not matter in terms of the quality of the signals. What matters is your personal trading style, right? So if you want to intraday trade and you're quick on your feet and you want to take short, quick trades intraday, that's up to you. And yes, the tools will allow you to do that. If you're like me, I don't like sitting in front of my computer all day, so I prefer to swing trade. So it's really up to you. But yes, absolutely.
Cool. Simon in GoToWebinar wants to know, are the signals specifically for S&P, or are there other indices as well? So
good question. Yeah, so you can use them on any asset that produces a chart. And as Jeff Gibby pointed out, I think you showed a chart of Meta, right? So you can use them on equities, ETFs, indices, forex pairs, futures contracts. They can be used on whatever your charting platform can produce a chart for. So absolutely, any time frame, any asset class.
Okay, let's see. Alan said, well, Alan had some questions about Metastock, and I answered those in the chat. But,
okay, yeah, I see that one. He says, I know you're biased, but what are the advantages of Metastock? I haven't read your answer, Jeff, but I will chime in there. So what I love about it is, number one, the scanner. So the scanning capabilities are, to me, unmatched across even the best broker platform. So I place all my trades through, which is now Schwab. It was TD Ameritrade, Thinkorswim platform. So that's where I actually place my trades. Which is, it's an award-winning platform. Metastock is unmatched in its scanning function. So the scans that it can run, the back testing functions, unmatched. So when you run these back tests and get all, you can get the Sharpe ratios and all these metrics that you just cannot get on other platforms and with their back testing engines. So that's my unbiased answer, is that those things are incredibly powerful tools within the Metastock platform that I've never seen anywhere else. And I've tried, and reviewed pretty much every charting and broker platform out there. So that would be my kind of unbiased answer. Aside from that, the signals are going to be the same, right? So the signals are the signals. The platform, when it comes to the buy and sell entries and trailing stop management, or that's platform agnostic, right? They're going to be the same.
I do need to correct you with one thing. I do, actually, you're right on the scanning. I start every day with the scan. But with the system tester, it does allow you to do a lot of testing. You can test multiple securities against multiple systems and kind of compare things, and has a very, very powerful system. One of the things that I would like to add is a Sharpe ratio.
You don't have a Sharpe ratio. I must be thinking of a different. There's one in there that I saw and I was like, this is cool. I've never seen this. I'll have to try to think of what it was. I thought it was the Sharpe ratio, but yeah, there was one, or probably 2 or 3 actually, that I saw, and I was like, wow, this is something I've never seen in another platform. But
Alan did say, hey, great presentation. Thank you. Thank you all.
Thanks, appreciate it. And
I agree. You always do such a great job.
It's what I love to do. I'm here to teach. I get all my satisfaction out of seeing people learn and become more consistent, and that's what we do at Altos. That's why I'm here. And a big thing with us is we are here to sell tools and indicators and strategies, but it doesn't stop there, right? And that's why we build these packages up like this, is with the live sessions every week and personal coaching and those kinds of things, because I think all of these things are good enough, and we could certainly sell them and send you on your merry way. But to me, that's not enough. I want to be there with you and hear your successes and see everybody progress. And as I mentioned, we have over 60,000 members in over 100 countries across the globe. And so I've gotten to see that many, many times, and that's what keeps me in it. keeps me from burning out, and going on now, coming up on 9 years doing this with our members. And I plan to be here for many decades to come, and not send people on their merry way and say good luck. So yeah, absolutely. Appreciate the comment, Alan.
I can tell that that's how you got your start was with teaching too. So
you're right. Yeah,
I have more questions. I don't think I've missed any. So I guess what I'll say is thank you for coming out. If you guys have questions, feel free to sign up for this at altostrading.com/metastock. Feel free to give us a call at 800-882-3040 or chat online with us at metastock.com/saleschat. So thanks again. Thanks, Jeff.
All right. Thanks so much for having me. It was a pleasure to be here. Thanks to all of you for joining, and hope to see you all again soon. Welcome to all of you who have joined the package so far. I'll look forward to working with you. And we still have some seats available. So if you're on the fence, remember, we do have a 30-day money-back guarantee. So make sure to get that 80% off. You jump on the opportunity. Check it out, and look forward to talking to you guys soon or seeing you on the next event.
Thanks, Jeff.
All right, take care.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube-book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.